Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, you know what? Totally forgot to put the music on. Well, we might have a quiet day today. Tomorrow is the big number of the CPI today. And not as much going on, although we do have a 10-year auction for the treasuries, so we might see some interesting things over there. But, you know, after Powell's speech yesterday on, what was it, Tuesday? Because today's Wednesday, right? Yeah, so I got that right. Oh, here's the music. Yeah, after that didn't turn into anything, Powell didn't say anything about current monetary policy. Like, the market really fizzled out. Like, there just was not interest, although there was a little bit of a bid going into close. So let's come over here, take a look at that. So here you can see yesterday, during our session, a little bit of bearishness and retracement overnight. Just a little bit of weakness here. Apparently there was some issuance from I think it was Germany that wasn't too strong, but just kind of a wash. I think S&P 500 mirroring that pretty closely, but looking pretty good. I mean, like, there was that big reversal on Monday, but like, we're headed right back up there again. And as long as this CPI is not like a complete disaster, you know, this could maybe be okay. Here you see oil spiking here this morning. Natural gas still languishing though. I'm, you know, there's been some analysts saying that it's going to spike here. It hasn't happened yet. Gold and silver still up there, looking good. And copper really looking nice, man. Maybe I should be getting myself some Freeport McMoran, huh? Then we got the Bitcoins. Bitcoin up just a little bit yesterday, but nothing too big. And the dollar still hanging out just below 103. Well, I have to apologize for being a little bit late this morning. I'm so sick. I mean, I don't think, maybe you might be able to hear it in my voice, but it's just like everything's achy and sore and I'm slow, and so I'm probably gonna avoid taking too much risk on today. We might find ourselves some opportunities here in the 10-year though, yeah. Oh, you know what? Just coming back here, one other thing we wanna note here is always want to note the special indicators that we're using. The spread is flattening at, well, this morning it's been flattening just a little bit. Just a little bit of flattening here across the board. That bottom data series, that is indicator. I have a free version out there in the free suite, and then I've got a more advanced one that you can get from speculators.com. So ooh, there's somebody in Discord studying for SIE. Anything interesting? Oh, somebody tried to use a name with special characters in it. Sorry, Salty. I'll unban those people. They have to change their name if they're gonna join back on. Oh my gosh. So yesterday. So there was this lady, Sheila Armstrong. That's what their name on Discord was. And they messaged me the other day, and it was like the most bizarre conversation. You know, they started out like, how long have you been doing this? I don't know. Like, I felt like they were trying to do something, but I don't know what was happening. And I kind of wonder if English is not their first language. But it was just like a really bizarre conversation. And they're like, oh, you know, I got scammed. This server is not safe. I'm like, well, the internet is not safe. You shouldn't just trust things that people send you in unsolicited private messages. That's going to happen anywhere on Discord, right? And then they went around and they started messaging other people on the server trying to get them to join in on some stupid Forex bullshit. Well, so I took particular pleasure in banning that one. Market seems a bit wild this morning. Well, the Treasury just took a dive there. They did. I'm not quite sure why. It's look, it's coming back up really hard. The liquidity looks a little frightened. Yeah, a little flighty. Liquidity is a little flighty here. S&P 500 didn't really do anything significant. I am seeing that the treasuries moved with the 6J and gold a little bit too. Something's definitely up. Who knows? Bitfinex has been like on the warpath over the past day about Binance because CZ said that like anti-Binance FUD was on the way. And Bitfinex says that means that something true is about to come out. What the heck is this Nassim talking about? Thomas Sawell. If you put $1,000 in your piggy bank in 1960 and took it out to spend in 2000, you would discover that your money had over time lost 80% of its value. That's true. Nassim Taleb says misinformation. If you put money in a real bank, an interest-bearing account, not a piggy bank, your earning power would have been preserved from 1960 to 2008. Only talk about finance if you know something about finance. Well, he does know something about finance, and what he's saying is true. And I think that you're kind of missing the point, Nassim. This is one of those instances where I say, like, Nassim is like a really smart guy, but I think he's maybe a little autistic. And so sometimes he seems to like miss the point, or he gets into pointless political, you know, I don't think he realizes his political bias. Let's see what the comments are saying about this. What are the people commenting about? He does know something about finance, though. That's a kind of a really bizarre fight to pick. Good morning, Mashun and Sophie. Okay, well, we had that big drop. The treasury market has recovered it so far. Sure makes me nervous about touching it, though. You made 50 ticks on oil today? Oh, man. Yeah, well, let's see here. They started out at 74 and they're at 76, $2 up in oil. Oil is looking really good. It's always when oil is long. You have a tendency to go long on oil, don't you? You're on a new one? Wait, what? Weren't you on a challenge before? Did you restart? Or is that a new thing? You can definitely... I can't tell you how many... I used to go and look at, like... Because they'll post who got funded that month. So I used to go and look at every single one who got funded. And one of the big things that I kept finding was that it was mostly oil traders that were passing. That oil was the thing that you could that moved enough that you could get lucky on. Yeah. Oh, you were just on paper. Yeah, money market rates haven't kept up with inflation, have they? Dude, nobody is agreeing with him in the comments of this tweet. Well, I'm not going to comment on it. I thought maybe I would try and interject, but we'll see if he keeps going on with it. No one works in the UK and everyone works from home on Friday, which means Wednesday is actually the new Thursday and everyone is hungover all week. What? Hey, Steven, how's it going? I haven't seen you in a while. Well, not a while. It's just been a few days. Oh, man. I think today is going to be a long stream because it's like the head cold. It's like the inflammation in your head. I feel like it makes me slower. I'm actually kind of tempted to pull out some coding here because I was looking at something last night. I wanted to, on one of the free indicators that I wanted to check out. Oh, there are some comments on the channel. Oh yeah, the multi-period candles is in the downloads channel. How do I jump? There we go. You made something for me, Akshay? Oh no. Oh dear. What did you make? What did you make? You made a chart. Is that a chart of all of the interest rates over top of each other? Oh, that was the thing we were talking about yesterday, that when you were saying that all of the different maturities for the 30-year. Xavier Jigsaw. Yeah, I use Jigsaw. It's my primary platform for execution. Oh, yeah. Well, for ZB, we didn't get to go into that too much. I mean, you're right. Of course you're right. You're always right. I don't know if it was really pertinent to the thing that we were talking about, which was that the S&P 500 definitely has a lot more noise in the data series, right? But especially the 30-year is a pretty broad array of maturities, isn't it? They all move pretty broadly in correlation with each other, but there is definitely a spread between them. Probably more so in the 30-year than in the other instruments, right? So blue is cheapest to deliver and red is on the run. Huh. Interesting. The thing that I think is so interesting about the bond market, and the thing that I wish I could get more into, but it feels to me like it's kind of hard to really do a whole lot in that world without being at an institution, is that there's just so many of them. There's so many different bonds, and that provides like this massive amount of opportunity for pricing and arbitrage and so forth. And so I always used to think when I worked at the bank, like, why do they bother with so much fixed income stuff? Well, number one, they need it. The bond market is actually huge. Like people need money to fund operations, and because there's different companies and there's different issues, like it's not just there's stocks, right? But if you just look at one stock, Amazon, there could be, dozens, hundreds of different issues just from that one company. And those are all different bonds that have to be priced a little bit differently. So especially if you wanted to do if your specialty was market making and arbitrage, I think that the treasury market would be one of the most fertile grounds for you to work in. Yeah. And I would like to do more of that. I would like to do more of that with the micro treasury yield futures, but I don't like, there's a 5-tick spread over here. There definitely doesn't look like the retail traders want to trade it today, huh? Well, I want to pull up this code real quick. I had seen something yesterday on one of my indicators. I'm just gonna do it off screen here. And you just see the code. Somebody asked me to do a coding project, so I'm doing it for them. And as I was going through my, as I was writing it, I noticed something. And I was like, am I handling that in this free indicator? I don't recall doing that. Okay. Plus, I did not sleep very well last night. And I had weird dreams, and maybe I was having a dream about it or something. It's just like sticking out in my mind. I wanted to check it. Nah, I did get, this is something else. I'm gonna go all out here, man. I'm opening up the Visual Studio. What's going on here? Well, after a little bit of initial downside, the equities are definitely turning to the upside, aren't they? This is gonna, like, my system's gonna choke on this. Debug. Attach to process. Okay. Okay. The reason it's crashing is because it can't get the instrument name. I see. So how do I deal with that over on this one? Oh, I see. Let me see if I can fix this. I think I can fix this. Trying to use the chart control when it doesn't exist. So I think I can use the bars array instead. Compile. And nah, I will leave it open. I'm still a little weirded out by that big drop in the treasury that kind of came out of nowhere. It seems like there's a reasonably healthy amount of activity going on here. It's a quiet day, but it's not dead. It is trading. Geez, that took a long time to compile. Okay, let's try it though. Oh. Oh. Interesting. Okay, well that answers my question. I can mess with it later. It seems like sometimes there can be, so there's a method called render target changed. And it seems to me that sometimes when render target changed happens, a render target can be null. And I don't know what's causing that or what you do about that. Could be doing this update layout bit in the state.configure. I don't know. Oh, yeah, text format equals. Nope, this is not my only job. I have a day job. Sure get that question a lot. Aha. Where do you go? Well, I haven't had to actually like go into an office since the pandemic. It was like work from home, and then they never asked us to come back. But my team was always kind of semi-remote anyways. But I worked for a healthcare exchange doing site reliability engineering. Oh man, I worked so hard yesterday. Like trying to get this thing, so I'm trying to get a load balancer to work, a new version of the load balancer, and it's like not cooperating. I think I resolved some of my problems. I think some of my problems actually had more to do with Docker. Like there was some stuff in the Docker image that was causing it to not actually update the image. It was caching it. But it still doesn't want to do the gateway thing. And that was so frustrating yesterday. And then after that, I come in and I do some programming on an indicator that somebody's contracted me to do. That one's actually going well. I got really, really far on that yesterday, but it is complicated code. Let's see what's going on here. The text format / text layout is not getting set. This update layout bit should not be happening in the state.configure. It should be happening in render target change. And that is why I get the error. Maybe this one up here in configure should just never happen. Because it is doing it down here. It's a great example of discipline. I don't know about that one. As of late, at least the last few opportunities that we've had, and I've been able to like sit on it and not, you know, go and trade on something when I shouldn't be. It's been more an instance of Seth not being able to focus and pay attention than it was Seth really wanted to take a trade and didn't do it. But I'm getting a lot better about that. I guess I could say I've gotten a lot better at not taking trades when I don't have an edge. But the disadvantage of that has been that I've missed more good trades. You know, like I really could have taken something out of Friday's action, for instance. Yeah, there it went again. Okay, so what I'm going to do is I'm going to add a check here. Yeah. Wait till you get to another stage. Man, you know what's something that's been kind of been irking me lately is whenever you go on Reddit and you see somebody claiming to be profitable or that they're doing really, really well. So first of all, guys, if you're doing really, really well, unless you have like 5 years of doing really, really well, don't bother posting about it. Okay. But the ones that I've seen lately are all like, they are way over trading. It's like, oh, look, I did really good today. And you go in and they're taking like 50 trades a day. Oh my gosh. Oh my gosh. Yeah, that worked today. I don't think that that's going to work for you all year. Okay, let's try this again. Okay. So that prevented the error from happening. But it's not printing. That's interesting. I'm gonna try it in here. It's like render target changed, then get called. Oh, maybe it does get called. I bet you it does get called in. It's just that the chart control and chart panel are not. Would you ever? Probably not, to be honest with you. Ever go full-time trading? So the issue with trading is that it is the least consistent income you can possibly have, right? So if you want to go to full-time trading, it's probably not very wise to have the trading be your only source of income, right? At that point, I think you're going to want to have other sources of income, right? So for me, I could go full-time per se, but it would be full-time, like still working on the channel, still working on the indicators, and then trading on top of that, right? Because then that gives you consistent income, right? If you lose money that month, you still have the money that you made from YouTube and the indicators, for instance, right? I know that's not what people want to hear. I think that the dream that everybody has in their minds is you just start trading and you do that for a living. It's just not very realistic in the current market. Like, you could do that sort of a thing when you were on the floor. But it was super hard even back then, right? So it really makes a lot more sense to have multiple streams of income if you're gonna go, if you're gonna try and go like full-time trading. Yeah. So let's see if that changed. Oh, I don't know if that compiled or not. Forgot what I was doing. And Treasury's right smack dab in the middle of the range from the sessions so far. we are I haven't seen too much of it yet, but we do need to be on the lookout for activity related to the auction because it's a 10-year auction today. But so far it's awfully dead in the treasuries, isn't it? Now, I shouldn't say dead. It's still a reasonable amount of volume going through. It's certainly died down a little bit though. But overall, not the best trading for our style of trading. Okay. That fixed it. Learning how to trade definitely motivated me to start other sources of income. Yeah. Well, we're going to see how this investment advising thing works, because I don't have a clue what I'm doing, but it seems to me that if you really want to go professional with this sort of a thing, that the investment advisor route and the CTA route is probably a better way to go. So, but we'll see. I fixed it. I'm happy with that. Early morning. I had read, so I hadn't read anything about Japan, but there was some supply from Germany that didn't go too well, and that was kind of the little blip of downside action that we saw like early in the morning. Overall, though, this is kind of a bizarre market move, in my opinion. Okay, I'm glad I had that sorted out. I was worried that if you try and do something if you try and initialize objects in on-render target change, that it doesn't always work. It looks like that the issue I was actually having was that I needed access to the chart control and chart panel specifically, and not just the render target. And so I was trying to initialize things that were beyond just the thing that you actually like draw stuff to. And so I needed to make sure that that ran at the appropriate time, which is when the data is finished loading, is the appropriate time to do that. So switching that over. I think should fix that. Yeah, it was the 10-year on the Germans. Minimum wage in the US is $7.25 and well, hardly anybody actually gets paid that. How much is that? How many work hours are there in a month? Number of working hours, 176. Depending on which month of the year it is. So 176 times 7.25. $1,200 a month. Less than $100 a day. Oh, you were awfully close, actually. It's pretty good. I think that the minimum wage thing is really interesting, honestly, because I mean, there's really good arguments for and against it. I think one of the things that always drives me nuts when I see that argument is that people will always say, okay, well, here's Franklin FDR on why we have minimum wage, etc., etc. And it's like, well, that was his opinion on why the thing was good. That a lot of people disagreed with him at the time and still disagree with him for the same reasons. And it can be, you could have different reasons. He's not like God. FDR is not like God. So like, why you bring it's like the dumbest, in my view, it's like a really dumb appeal to authority argument to appeal to FDR's authority on what minimum wage should be when they're saying that minimum wage should be a living wage, right? I think the reality is that if you make the minimum wage a living wage, that there is a lot of labor that simply can't get done. This is not worth that much. It might not have been the case like that 50 years ago, but we're becoming so efficient with things that there can be an instance where somebody needs a particular job done because of their circumstances. So for instance, for me, it would be nice to have somebody here with me on the stream. I don't know if they would talk too much, but they could kind of keep tabs on things and remind me of things, that sort of thing, or like a risk manager too. They could play risk manager too, right? But I might not be able to afford to do that. So there's an instance where like I'm having them do something. I would be having them do something that is really quite inefficient. Really, right? Is like with the right tools and stuff, a normal person could probably do that all themselves. And that's what I do right now, is I do it all myself. But I would like to have somebody here, right? So there could be some situations where you might do something that is less efficient than like what is a living wage, right? And then those jobs can't exist because of the minimum wage, right? But then what happened? Then what happened was the politicians just never changed the minimum wage, right? So now we've kind of gotten to the point where it is kind of like what Republicans wanted. Like the minimum wage is so low that any job that pays less than $7.25 an hour is almost like not worth doing. You know what I mean? And by the way, during that whole time period where they didn't change minimum wage or anything, there wasn't a whole lot of inflation pressure. There wasn't a whole lot of inflation pressure. And we didn't get really much inflation pressure until we had the pandemic and we started doing all of these things that increased household income. Seems to me that one of the biggest drivers of inflation is household income. And if you increase household income by increasing the minimum wage, you create inflation. So it's probably a good thing that there should be a minimum. I think there should be a minimum to prevent people from being exploited. But it seems to me that it's healthier for the economy for that minimum wage to not be a living wage. And ways I've had profitable years and then suddenly my strat stopped working. Yeah. I mean, everybody goes through that, right? This is why it drives me nuts when I see these guys on Reddit and they've only been trading for like 6 months and they think they're profitable traders now. Come back in 5 years. You get 5 years and then I'm impressed. You think income is the symptom, not the cause? Maybe. Could be. We don't really have a way to like scientifically test that per se. Right? Because it seems to me like one of the things is that they tend to do minimum wage studies in like a vacuum, as they're like, okay, let's go to California and see what happened when the minimum wage increased in California. And it seems to me like there are effects that happen when like large portions of the nation change the minimum wage, or if we changed it at a national level. I think that has a different impact than if it just increases in California. And like, heck, it's really expensive to live in California. Like all these places that have a higher minimum wage are expensive in general. But it also kind of begs this question. So like, let's just go back for a second and let's just assume the left's goal is correct, which is to say that minimum wage should be a livable wage, right? Well, then it would only make sense that the minimum wage be indexed to inflation, right? So the whole issue here is that markets are not efficient, right? And you can have prices don't reflect all available information, and you can move very, very far away from fundamental value. And that can be true in the labor market as well, where there are people that are being underpaid or being overpaid and so forth. And so because the market is so inefficient, we have to have systems that are flexible. That's why the Federal Reserve is such a good idea, because it is inevitable that you are going to have market crashes and things like this libertarian dream where if like the government didn't get involved in anything, then we would never have any serious market downturns. And you know, even if we did have a recession, it would just resolve itself. It's complete fantasy. Okay, if we didn't have a Federal Reserve in 2008 or in 2020, it probably would have been like society ceases to function. Okay. Really, we really have been in situations like the market can create a situation like that. So instead, what you got to do is you have a flexible system, and you have all of these variables that you can kind of adjust. So the interest rates and the money supply are two of those variables that you can adjust, right? Well, there's two other variables that the Federal Reserve doesn't have control over: minimum wage and tax rates, right? And those have a significant impact on inflation as well. So if we really wanted a system where the Federal Reserve was able to like effectively control all of those variables, you would have to give all of them to the Federal Reserve. And then what? And then what would you have? Then what would Congress do? You know what I mean? It's kind of an interesting thought. Instead, we live in this world where half of it is handled by the Federal Reserve and half of it is handled by Congress, and Congress doesn't always handle it correctly. Even if it's fixed to inflation, there are questions about how effective you're measuring inflation. Yeah. And even then, wages are the last thing to rise within the price chain. Well, yeah, I would say in this particular situation, at least, that it seems that wages have been the last thing to rise, but I don't think that that's always the case. It can be the opposite. I think we got to be careful about making too blanket of a statement. I think that you can have situations where the politicians come in and naively raise minimum wage across the nation, and that in and of itself results in demand pull inflation. Or, well, it really would be both, because households would have more money, so companies would raise their prices, but also companies would raise their prices because their labor costs go up too, right? And that leads to inflation as well. And that's why I'm saying that, like, since we haven't really raised the minimum wage since like 2005 or whatever the deal is, and that whole time period has been low inflation. I'm just saying. Government could provide food and no, bad idea. I think bad idea. So the market is inefficient. We've established that. And we've established that because the market is inefficient, we have to be flexible and to be able to manage certain variables within the economy. Okay. Does that mean that we should run the country like China does, where the central government is just in charge of practically, I mean, there's like private businesses in China now, but like they have to do what the government says, right? The government can at any time come in and say, you're going to do this, et cetera, right? And they have complete control over all of the variables in the economy. They can just change it at will, right? There's not like a democratic process for that. Like, they want to change what the minimum wage is, they can just change it, right? There's not like a Congress or any, well, there is a Congress, but it's not the same thing. It's like bureaucrats can change these variables, right? Why don't we go to that kind of a world? And the answer to that is that not only do you need to have a system that is flexible and is able to adjust the monetary controls to current situations, but you also need a system that properly incentivizes people, right? So the reality of it is that people are lazy, and they're not going to do what you want them to do. They're going to do what is the optimal strategy within the system that they're placed, right? So living is a really strong incentive, and having to work to live, you know, that's kind of one of the things that really makes the system work. So if housing and food was like provided to everybody as like a minimum level thing, then that would really destroy some of the incentives that causes the system to work, right? Then everybody would just leech on the system. And you've seen that, by the way, because there are some areas of the country. You ever seen this thing in Portland? Or not, is it? Yeah, I think it was in Portland, where there are people that from all of the government assistance could make more than $100,000 a year. And so they were just not working. They're just not working. There's a problem there, right? It shows you exactly this sort of thing. So we have to think about how we can structure our systems to create the correct incentives to lead to the behavior that we want. The good news is that if the government just kind of, you know, is hands off for the most part, and only gets involved when people are doing things that would have like negative impacts on others, nature itself creates those incentives for us really well, right? Doesn't mean that we should be libertarians. Libertarians are naive. But is the government probably doing too many things in our current system? Yeah, probably. I think in particular, the government's intervention in healthcare and education have been very, very harmful. Force people to be entrepreneurs. Well, I think that's the way that I really feel like that's the direction we're going. Yeah. So like with artificial intelligence, as that becomes more and more sophisticated, you know, there is certainly a lot of like clerical jobs that will be a lot simpler. And I really do think that a lot of economic activity is going to shift to, you have to own things, you have to be inventing things, you have to be a creator, you know. And there's going to be a lot less opportunities to work for somebody else for high pay, and a lot more people will be working for themselves, which, hey, wouldn't be a bad thing. It's just our current system isn't very well equipped to do that, right? Like if I'm an entrepreneur, well, I am an entrepreneur really to some extent, right? So if I really want to ramp up my business, you know, and I want people to be able to like invest in my business, right? I'm very limited in what I can do by that from the securities laws. Now, I don't think that you should be able to get around securities laws. I just think that now that we have the technology, that they should be able to make it a lot simpler so that anybody can do it, right? And so that we could get to a world where we could have like micro investing, where we have a market that is like, you know, an entrepreneur market, and you could be investing in Mr. Beast or Speculator Seth, you know, right? I think eventually that might be the way that it goes. Of course, the split side of this is that because of artificial intelligence, a lot of other tasks are going to be a lot easier and a lot less expensive. And that's going to have interesting repercussions too. Because, you know, like one of the issues is right now, if you want to buy a house, you know, like you need like $700,000 or more. It's a ton. It's a ton. But what if we get to the world where you can build a pretty decent house for like $5,000, you know, like it's just 3D printed or something like that, right? And the cost of housing becomes like a hundredth, a thousandth of what it is today, right? That's a very different world. It's a very different world, because the reality is that the amount of work that you would have to put in to feed, clothe, and house yourself would be less. And so a lot of people probably would work less, and it would probably be fine because their labor would be so productive. Yeah. It'll all work out in the long run, because when people have free time, they figure things out. If people have free time and the proper incentive, they figure things out. Yeah, we don't, I mean, everybody looks at ChatGPT and they're like, oh, this is so cool. I don't think that we can even fathom the way that in the next 10 to 20 years, the ways that AI is going to shift the economy. Now, so here's something that I think you might be able to derive some edge from, okay? And that is, AI is becoming a thing, but the biggest challenge with AI is the data. So what will happen is a large company has a CEO, and they'll be like, oh, I tried this ChatGPT thing. Why aren't we using artificial intelligence to make our own business decisions, right? And the engineers will go, oh, well, that's a simple Python thing. We can hook that up and we should be able to get you answers real quick, right? So they do that. And what they find is that the answers that they get out aren't very useful, or they have lots of problems because the data that they're using isn't very clean. That it's not in the form that they need it for the artificial intelligence, and there's, missing data, and that just the data quality is poor, right? And so the way that a lot of AI projects end up going is they realize that they have a lot of technical debt on the data engineering side that they have to overcome, and they're never able to fix it, and then nothing happens, right? So the place where you're probably going to see like the biggest growth opportunity, like to invest in technology and stuff, is not going to be necessarily investing in OpenAI. So like Microsoft invested like, what was it, $10 billion into them or something like that, right? I would be looking for companies that are doing things like data lakes, and they're data companies that specialize in products that help you manage the data. Because the whole reason that the AI thing works is because it can go over a really large chunk of data. That's exactly what Lennon said when he signed to expropriate private industry, guaranteed wages, and houses that will give free time, and people will spend it figuring out stuff. No, because they need the incentive, right? The problem with communism was it destroyed the incentives. Oh, you got a degree in data analysis? Yeah, so something I'm noticing like on LinkedIn with all of my friends that were into data science or artificial intelligence is they've all basically become data engineers. Right? And so like all of the work is done in creating pipelines that manage the data and stuff like that. Orchestration frameworks, data lakes. My company created a data lake, not that they have any reason to do it, but just they did it, and because they needed a place to store things, and we'll see where it goes. Seems like they did a good job though. They didn't go, oh, let's just do the AI stuff, and then went straight to no. They said we want our data pipeline to be pristine, and so they did that. Oh, what was I doing here? So human consciousness is not evolved enough. Human consciousness is an interesting thing. Yeah, it would be tight, but I could probably afford to have an employee that was just sat here and watched the stream with me. I don't know if I'd be able to give them anything they would really... I went for a really long time feeling like, if I had a video editor or I had this, then I'd be able to do so much more. And I've gotten to the point now where I feel like that wouldn't change anything. That, I would need to be making a completely different style of video to have a video editor be worth anything, Because most of my videos are just talking head videos and you just have to edit the speech. Right. So in order for hiring somebody to be worthwhile, I think that it would have to be either somebody to just do business things and like pursue sponsorship opportunities, that sort of a thing, or a script writer. That would be kind of more of a partner. Somebody that's really good with finance that could write scripts that I could then record to make more content. And those are big pulls, right? You need the right person for those. Oh yeah, I was gonna respond to this guy, right? You want it done right, do it yourself. Yeah. I'm willing to give up some of the things to other people. It's just, would I be getting extra value out of it, right? The issue is with the bottleneck for me right now is the amount of time that I am able to spend on creating content, right? So basically, I have to do it all in the evenings and the weekend. And my evenings and weekends have been taken up by babies, right? So if I wanted to get to the point where I was putting out multiple videos per week, I would need writers. It's a hard thing, cause so I watched a TikTok video the other day where this person was, I don't know, I don't think they were like criticizing or complaining per se, but they were just kind of pointing out that for a lot of TikTok creators that they come in and they try and give you value, and the reality is that they just tell you a bunch of surface level stuff, right? I certainly have seen that. So there are some finance influencers per se that they're just telling you like, oh, contribute to your 401k and stuff. It's just like stuff that, if you know anything about investing, you should probably know. I know that a lot of people don't know that stuff, but it's very surface level stuff. So his contention was that you need to show people what you believe instead, and that's what will get them to stay. I don't know if that's actually what leads to good content, at least not on TikTok, right? But I'm fast approaching this point where, you know, some of the really deep, valuable content that we've been able to give you, you know, I've given about as much of it as I can give over YouTube, you know. I have some videos planned. I think the next video that we're going to do is, this is why you suck at day trading. I think that's a video. I don't know if I'll be able to do it this weekend though. I think that's the next video. We need to do a video probably about Omgren Chris, but then that's like the biggest quant thing that we can do at the moment. So where are we gonna bring in like that deeper value stuff? It's gonna have to, a lot of the growth is gonna have to come from people like me, or rather people like me, which is a tough pull because I'm not always the most interesting person. But I do think that the information that we have and the framework that we're able to make out of markets is a really valuable way to look at markets, and can teach us a lot about, you know, how we should do things, particularly in the political arena. So I saw quite a bit of renegling around there. There was a little bit of a sell in the treasury, and they popped right back up. Now is probably a good time to come back and look at the market overall. And if we zoom in here to these treasuries, so you can see we've been trading. This is the range that we've been in, and Delta has kind of been back and forth as well. There may be a shift in the spread though. We may be steepening in the spread. You can see there's a slight little change in it. S&P 500, on the other hand, is doing pretty well. It's not super autocorrelated, but it is to the long side, and the volume is to the long side as well in the S&P. Again, these I'm using NinjaTrader 8 here for these charts, and the spread charts in particular, those are coming from my SpeculatorSeth.com paid indicator suite, very affordable, $100 lifetime license. Probably a good time. I know that most of you guys here probably like already know this stuff, but I'm trying to get myself in the habit to talk about things, because like what I'm starting to realize, when we had our friend over on Friday, he was talking about, you know, you go through the pain points and stuff. That was definitely something that I had heard from people about marketing before, and I had thought and wasn't quite sure how to handle it, because it's like, you know, the pain point is trading is hard, and it's like such a big amorphous subject. But what I've realized since then is that we have affiliate links and products to solve all of the major problems that retail traders run into, right? Retail traders tend to only look at price, and they're not looking at the orders. So we have Jigsaw affiliate links for that. That's the best way, I think, to look at the orders, right? They tend to only look at one instrument and not the market as a whole, and they don't look at correlations, spreads, anything like that. And we have a spread indicator in our SpeculatorSeth indicator suite, and a couple of other tools that help you there. Also some tools that help you see order flow, right? Retail traders tend to not follow the news, especially not the breaking news. So we have Financial Juice affiliate link for that. And then retail traders tend to just have an incorrect understanding of the market. And we have a great series of videos that get you everything that you really need to know to really have a correct understanding of markets, I think. So we address all of those problems. And it is, I am obligated to point those out as often as I can. Not just because it helps the channel out, and those are resources that we can use to make the channel even better, but because those are the things that are going to help you the most. Those are the things that are going to help your average retail trader the most, especially the News Squawk, man. If you don't have a News Squawk, pay $100 a month for the News Squawk. It is so worth it. If you can afford it, you should do it. You know, those are going to be the most valuable things to you, and I should be taking every opportunity that I can to point it out to people, because that's the thing that can help them out the most. But I always forget to say anything about it, because I don't think about that stuff. Well, yep, News Squawk. So I use Financial Juice. So if you go into the video description, I have an affiliate link for Financial Juice. Well, Twitter has been awfully quiet this morning. DJ Seth, what are you getting that from? Oh, well, I'm not doing any DJing. It's just the Stream Beats 100 Thieves Hype Tracks playlist on Spotify. I could DJ it. I've got the controller here and everything. I think I would need a little bit bigger of a table to organize things so that it was more within my reach, but I could totally DJ stuff. I wrote something to one of your comments on r/dating and the auto mod deleted it because I didn't have enough karma to post. Oh, what was I saying? What were you responding to? I can't think. I don't think I've posted on that sub in a while. I've been kind of trying to avoid it because I just feel like, what is it? I think I have a fortune cookie over here somewhere. I think it's like fell underneath of one of the controllers I have here and it's lost to time, but it said something that to the effect of the wise learn more from fools than fools learn from the wise. Yeah, I have to remember that because I see something that's incorrect and I just want to correct it and stuff, and I need to realize that, especially on the r/day trading sub, that it's probably wasted breath. Oh yeah, I did post yesterday. You're right. The speech. What were you gonna say? I tell you what, yesterday did not go the way that I thought it was going to go. I thought that Powell was going to say something and he was going to smack the markets down so hard and it was going to be a big, and then it was like that didn't happen and everybody I think was expecting the same thing as me and they were kind of disappointed. And they're like, well, I don't want to trade anymore, and then like nothing happened the rest of the day. Wise man can learn more from a foolish question than a fool can learn from a wise answer. There you go. The whole thing is that people want to believe that the past data predicts the future data. Really, it comes down to how efficient is the market, right? Because if current market prices reflect all available information, right, then you should be able to use that price to get an overview of all of the available information, and then hopefully you could use that to extrapolate what future prices will be. So weak form efficient market hypothesis. It's not true. It's false. Once you realize that prices aren't informationally efficient at all, and that it's the orders that move things, now all of a sudden you realize that what the current price is doesn't mean a darned thing, right? It's a completely different perspective. And when you're talking to people that don't understand that, it's just like everything you say just goes in one ear and out the other. This is a good question, actually. Why were market participants expecting Powell to say anything at all regarding the policy when the symposium was explicitly about central bank independence and Powell was on the panel regarding mandate? You're right. And I pointed that out before where I said, I don't know if this is the forum where Powell would really have a chance to really smack the markets down, but people are definitely anticipating it, right? So but I think that there was another thing was that I think that we expected the forum to be a little bit more free form, You know, like the News Squawk was saying ahead of time that there wouldn't be pre-prepared remarks and that they would just go straight into Q&A. And then we did get a prepared remark, you know, like a minute later. So why we had that expectation, even with me knowing all of that information, I think a lot of it just has to do with that conditions have gotten so easy, and we all think that the Fed is going to come in and smack it down. And it seems like when the smaller guys are saying that stuff, like the market's not reacting right now. So we definitely got ourselves all worked up into something that was a nothing burger. I also think that the media played a big part into it. Like Zero Hedge was hyping it, that sort of stuff, right? So yeah, everybody got worked up into something that really was never going to happen. But you know what, that happens all the time. So I definitely think that that's why the market behaved the way that it did yesterday, though. People were expecting him to say something. When he didn't say anything, people dumped their hedges, and there was a little bit of a rally, and then things just went dead. And it really seems to me, especially here in the Treasury today, that the activity is just not there. I have not seen a market like this. Come over here, back to the charts. Look at this cumulative delta in the 10-year, the middle data series there. Look at that. Like, I've never seen cumulative delta like that much back and forth. This is a range-bound, messy market that is mostly just market maker noise. It's not really doing anything. Watch, when we're done trading, it'll come in and make some huge move in anticipation of the auction or something. But right now it's just dead. The thing that I find frustrating about a move like today, or about conditions like today, is I can come in and I can be like, well, this is just a mess. I shouldn't touch this, right? And then a trade will come. Like a move does come, and I had just decided to be hands off, you know? If the hedges were dumped, why has there been no... well, you can't get that. The open interest reports don't come out until Friday, right? Like the real positioning. I guess there's that daily open interest thing. Isn't that different? What's the difference between the daily open interest and the weekly commitment of traders reports? Okay, but if it has to do with an let's just assume that there was no net change in it. I think that probably what happened was the people that were making those bets and taking those hedges were only taking it on an intraday basis. I'll have to go and look at that. You know, any full-time traders? I think that all of the people that come to mind that have really been serious traders, they almost always have other things going on. So funnily enough, most of the guys that I've met that were like really full-time trading, they had wives that were very successful in business. We've come across that multiple times with our friends on the stream. Actually is probably the most serious, but he traded for an institution, and the kind of trading that he's doing, or that he was doing, I guess he's going to school now, but the kind of trading that he was doing was like was basis trading. Yep, Ace's wife makes the money. Uzi's wife makes the money. I mean, I think they're both involved in the business, but yeah, he they have other forms of income. Actually, is a poor PhD student now. It's a hedge strategy with the you don't even get the stipend. Oh man. It really is like I know it sucks to say this sort of thing. I know you're being genuine. When I see people ask about do you do it full time, sometimes I wonder if this isn't some sort of like people trying to undermine the stream or something like that, because I do think that there had been some people that were trying to make the stream look bad, and that was one of the first things that they wanted to do, was like, well, he doesn't do this full time. But with futures trading in particular, I think you have a really hard time as a retail trader doing this for a living, unless you already had millions of dollars, right? And you already had a big amount of fixed income to cover when things don't go well. Like, you think, like, just for me, okay? Because I make more than 6 figures at my job. Probably. Now, after all this inflation, I'm probably underpaid, but I digress. So let's just, for the sake of easiness, easy calculations, let's just say that I make $100,000, right? Well, how much money would you need? How big of an account would you need to be able to live completely off of the trading, right? Well, first of all, that's 100,000 only includes wages. It doesn't include benefits. So health insurance is like a huge cost, like almost 10-20% more. So really what we need to make is like $120,000-$130,000, right? And then you go and you look, and especially with we're trading that much, so some strategies will not work. You're going to have to be using multiple contracts, right? So you have to be careful about your impact on the market a little bit. And, so this kind of thing where it's like you have $100,000 account and you like triple it every year and make, $200,000 out of it. I'm sorry, it's just not realistic. Like an effective, like a top of the line hedge fund maybe makes 30%. So really, you would need like $2 or $3 million. And if you had that much money, you might as well just put it all into fixed income and retire. You know what I mean? Take your annual cost of living and divide it by the 30-year bond yield, and that's what you need to day trade? I'm not sure how that makes sense. So let's say that you needed to make $130,000 a year, and then you divide that by 0.05. We won't go with the third. Well, we'll go with the 30 year. Okay, the 30 year is 3.698. 0.0369 equals $3,500,000. Oh, you're just saying put it all in and just make the, well, okay. That would be like the risk-free, right? That would be your trading matched the risk-free rate of return. I think you'd be able to do a little bit better than that. You would make more views with a cigar and sunglasses. I'm not sure I actually would. That's what I expect. You really think that you put all of that effort into it and you'd only get the risk-free rate, huh? Well, for most people, maybe that is true. Because most people just don't have edge, right? What do you think about prop firms? Well, so yeah, the issue with the prop firms is that they make you too aggressive, right? So they're expecting you with a drawdown of $2,000 to make $2,000 within a month or two. Like it's a lot, you know. They're basically asking you to double your account in a month. Yes, at least till the 95th percentile. Above that, your mileage may vary. Yeah. But I guess that's the point, right? Is even if you're a very, very successful trader, it's not very realistic to live solely off of your trading unless you already have a huge wad to trade, right? And that's the thing that I think hurts people. Look, I've been doing this for 5 years now, right? And I haven't made money in all 5 of those years either, by the way. I did way better in 2022, for instance. But it, you know, you're doing, yeah. Some prop firms approve $2 to $3 million accounts. If you can't get that, you can't trade full time. You could certainly, you know, like I'm sure that the guys at Axia that they do it full time, right? But I guess the point is the amount of, you know, room there is for like retail trader to live solely off the income from their retail trading. It's only a handful of people in the world that can do it. And I've found that one of the things that has helped me the most is just reducing the amount of risk that I'm taking on. I come in here and I trade micro treasury yield futures and I'm only risking like $10 at a time. That's made a huge difference. And it's so much easier to trade when I don't have to worry about, like, you know, a 20% drawdown in a single day sort of a thing, right? And I think that if people stopped trying to meet the qualifications for passing a combine, because I think that what people say is, oh, here's what the combine is, so that should be like the gold standard for performance. It's no, it's like way, way, way lower. I think that what you should be doing is like, if you, so think of it this way. You have $1,000 account and you make $300 in a year, right? Now you have to take commissions out of that and data fees and everything else. And when you're trading $1,000 account, that's like a huge portion of it, right? Okay. But eventually you can size up, you can save up more money and you can trade bigger than that. And then those things become a small part of the cost, right? If you can come through and you can go the whole year and consistently pull out 30%, you're a rock star, man. You're a rock star. If you were running a CTA, like seriously, if you could prove to me that you've made 30% every year for the past 5 years, you know, we could put you up in a CTA fund and you could start trading other people's money, because people would, like, investors would kill to get 30%. Like 30% is in the range of, like, those are unusual, you know, that's unusual, that's not sustainable. There's got to be something fishy. Maybe it's a Ponzi scheme, like that sort of a thing, right? If you can just get 30%, think about that, right? If you take the commissions out, I made 30%. I made like 400 in just the second half of the year. Got eaten away by the commissions and everything. But like I said, if you size it up, it's a pretty good deal. 30%. Frankly, if you could even just make 15%, that would be enough, right? Think about that. Think about that. You have $1,000 in your account, you're trading micro treasury yield futures, and you're just able to make $150. $150. You could do that in one move. Yeah, I think so. So kind of what happened actually was I was really, really good, and I was like, we're gonna start sizing up here after, like, some of this volatility goes away. And then I had one trade that like really hurt. and one trade that really hurt, and I kind of backed off from it. So I kind of want to have a couple really good trades first before I try sizing up again. But we are close to where we want to size up at least to 2 contracts and start working that out a little bit more. Yeah, there you go. Put like 50K in your account and do TN. That's interesting that you say TN and not ZN. I could do TN. Sure. I mean, just trading ZN. Actually, let me come and look. Numbers on Jigsaw trading account. So let's say $50,000 account. I think that would be sufficient to trade ZN. Let's see if my stats pass that. I'm not sure that they will. I think there might have been a big loss in there somewhere. Dun, 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 dun. I can hate that. Okay, so there's the year, and then we're only doing ZN. Dude, I totally passed. I would totally pass. Look at that. So that's just like all of the sim trades on ZN I've taken this year. I made 15K with a $50,000 account. So like double that. That's 30%. So if I was managing a CTA funds, I don't know, like the number of trades that I took in there is probably makes this all a little suspect. 171 trades. I am taking on excessive risk with this too. Like let's see here. Oh no, my MFE is higher than my MAE, but I bet you that my largest losing trade is bigger than my largest winning trade. Oh, that's not too bad either. Average, oh, there you go. Average winning trade is smaller than my average losing. I'm taking on a lot of risk to do that. Okay. So I think it still needs some work, personally. I would be awfully nervous if like 2023 was like I was gonna start a CTA fund and manage other people's money, right? But I think the point is like, are we on track to be able to do that? If we can pull 20-30% out a year, yeah, we totally could, right? But like, think about that from that perspective. You just need to make 30% in a year, as opposed to like doubling your account every month, which is what the combines want you to do. It's a completely different world. Yeah, I have said this before looking at those stats, and I'll say it again, Seth. Martingale's hence proved. Yeah, no, I totally, on these sim trades, I totally martingale it. I'll tell you what I do is I'll come in and I'll take like a little tepid trade, and then if it moves against me, I'll add a little bit more, and then I'll immediately start scaling out of it and try and get myself down to one contract and just try and let that one contract run. And then if that doesn't work out, I might do it once more, and then if I lose like that twice in a row, then I stop. That's how I've been doing the sim trades. Is like, I'm taking on excessive risk to get those numbers. Yes, totally am. But I would call it like a limited martingale, right? I'll only do it like 2 or 3 times. I won't like just keep increasing it and keep increasing it. And it did pretty good. Did pretty good at never having like a huge loss. Now, the other thing with those stats though, yeah, here's the bigger thing with those stats I think that we have to keep in mind is that it was a big year for bonds, right? Probably I'm not going to perform that well every year. Probably not. That year may be one of my best years ever. It may well be the case. Just because you're never going to get a year, you know, it'll be awfully hard to get that much bond volatility again. Right? Now on the split side, if I was like managing a fund, I probably would take a lot more, you know, probably would have a lot more executions and stuff. So then if I was more active with it, then would I have gotten the same numbers? I don't know. Maybe not. But I do think it's important to point out that some of those things are me taking on risk. So I don't think that I'm doing what a lot of people do that really bothers me, where like on every trade my take profit is closer than my stop loss and all that sort of jazz. Instead, what I'm doing is I'm taking on a lot of risk at the beginning in a place where I feel relatively safe and taking it off quickly. Right. And I'm all about the management, as in I kind of know what's going on, and so I'm able to bail very quickly. Like able to just only take on a lot of risk for a short period of time. Oh yeah, you asked me about volume profile earlier, didn't you? I totally skipped that question. I think that the volume profile is a useful tool, but that the underlying theory, auction theory, is incorrect. It has some useful elements in there, but ultimately there's a better explanation for what the market does. So you don't trust strategy optimizations for robust? I'm not sure what you mean by that. So my criticism of volume profile is that the point of control in the S&P 500 is usually the open or close. The majority of the volume happens at the open and close, so the volume profile isn't telling you anything that you don't get from candles. Well, at least when you're looking at point of control. Strategy optimization is a fancy word for overfitting. You don't trust overfitting? I don't trust overfitting. Yeah. What concerns me is when we've over optimized into something, and that if something goes awry, it's just gonna straight up blow the account, right? So I go through and I hit 30% for the year, excluding commissions and all that sort of stuff. But look, I was trading something where I was trading like up to 5 to 10 contracts at some point, I think, right? You know, there is some risk taking that on. So what if I happened to be in a situation where I had that size on, and then there was this massive move against me and I caught slippage? You know, that could easily be thousands of dollars, just like right there, right? So there is kind of course you have a stop and everything, and that should manage it, but like, you know, that's kind of where you have to go through it. It's like, if I can go 5 years without having to blow up and pulling that, then I think that pretty happy with it. I don't think that I would, though. I think that within doing that within 2 to 3 years, I was able to avoid any kind of blow up this year on the sim trades, but I definitely have had a tendency in the past to do that. Yeah. until I scaled down this past year, which is really like the big change that I made. Yeah, the trick to a martingale is you have to have infinite money and can double down infinitely. No, that's what I'm saying. Like when I say a martingale, I'm saying I'll only do it 2 or 3 times. Like I'll take a trade and it'll be like a tiny trade, and like maybe I'd lose 2 to 4 ticks on ZN, right? Then I'll come in with 2 contracts and easily make it back, and then take 1 contract off, let it go. Right, that's what I mean. And if the second time I'm still not in line with the market and the trade's not working, then oh well. But I do have a tendency to be willing to come in and try something a few times, just because I feel like that I have something that predicts the flows, and that the flows is going to be this way, and that I just need to give it more time. So instead of having one trade where I just take a really big stop on it, I just take a multiple really small ones. Because if I'm getting things right, it should run for me. So I wouldn't call it an exactly a martingale per se, but I do use tricks to take on take on risk and make money from taking on the extra risk. Yes, this is very limited compared to what you see a lot of other people do. Right? There's some people on this. I have to wonder. Matt always, so trades by Matt. He seems like a nice guy. I've never really sat down and watched any of his streams or anything. But in the last year, he became really, really popular. And now, whenever are there people on YouTube that you watch videos come up? I never get mentioned. You guys, I think that my audience just doesn't post on Reddit and forums, which is kind of funny because I love that sort of stuff. But it seems like you guys don't post those places, and you never, because I never get mentioned in those threads. But what I'm noticing now is that every time that Matt's name comes up, there's a bunch of people that come in and bashing him. And to the point that I almost wonder if somebody is like doing a campaign against them, to be honest with you. Matt deletes streams. I have caught him deleting streams, yeah. Well, actually it's worse than that. So like, it used to be that he would put everything into a playlist like I was doing, right? And then YouTube fixed that, so you didn't need to do that anymore. So like streams and live streams, regular videos and live streams and shorts get displayed on different tabs on your page. So there was no need to do that anymore. But what Matt did instead was he got an editor, and the editor just creates a 5-minute summary vid of every day. And that's all you get. And the streams become unlisted. So I had seen, it used to be that he'd put them all into that playlist. And then if it was a bad one, there was a few times where I noticed that they didn't make it into the playlist. But now the live streams just aren't saved. Like if you save the URL for it, if you have the URL, then you can see the stream forever after that. But it's not listed anymore. People probably lost money following him and so have a vendetta. Maybe. It's like 3 or 4 accounts come in and are just like, oh, he's so bad at trading. So one of the things that's cool, actually, I think I can show you this. Like one of the cool things that you get from your analytics. Vinny does the same thing. Oh, well, I'm glad to hear that he doesn't want to talk about me anymore. That's good. I haven't heard anything about what's going on over there for a long time, and that's the way it should be. Although it always kind of makes me a little nervous, because that's the way they used to be. Is you wouldn't hear anything from those guys, and then they'd come in and start stirring up shit again. So if you come to the analytics, audience. Oh, what? I'm down -2 total members, but I'm up more than usual. That's kind of weird. Okay, well, whatever. Definitely grown in the last month. Okay, so anyways, when you come down here, channels your audience watches. So here's what I was gonna say is Patrick Wayland. Patrick Wayland is back. I don't know how he does it. Hey, actually, you know what? Let's go check him out on Social Blade. Your title for video Halloween is bad is top, right? That video did do well. Can you see it? Yes. Videos growing your audience. We discuss how Halloween bad. Moderate number of new viewers who returned. I was like, what? It's funny. It says that advanced tips and tips is not doing well, but it is actually doing amazingly well. I'll show you that. Advanced tips and tricks. So it's interesting, like the average view duration is only 36%, but it's a longer video. So I think that it being a longer video is really paying into it. And look at the performance of this one. And there's a big hump right there. This video is on track to possibly be the best performing video on my channel. Yeah. No, that must be, you must be, this one I only put out like a week or two ago. You might be thinking about something else. The engagement on it isn't bad though. Yeah, it must be a different one. I think that what's really going on here though on this one is that it's just being pushed out to more people. Because the impression click-through rate isn't like crazy. I mean, I want it to be above 5% is the goal. And this is about average. So I think that what's happening is there's like more people, like when you see how many people came from search terms, YouTube search 9.4%. So like 100 people or so out of all of that. That's not bad. That's probably why it's doing well. Okay, so Patrick, I'm interested to see here if I can go back far enough. Nope, it's not. It doesn't go back far enough. So Patrick Wayland was like the top creator in our space for a really, really long time. And then he made a video where he basically admitted that the videos that he was making, because what he'll do is like, oh, here's a trade that I did today, and you'll see parts of it and it's all edited live and everything. And he basically admitted that what he was doing was they were sim accounts. So he was just trading a bunch of moves during the day, and then one would go well, and so that's the one that he would show you, and it was all fake, right? So he admitted to that, like straight up just made a total video about it, and his channel like cratered. And now post pandemic he's back, I guess. That kind of irks me. I don't have any respect for that guy at all. I'm not gonna say that like what he's doing is dishonest or he's a scammer. And, you know, I don't want to get into that kind of a spat, but I just don't have much respect for the guy. Lucas, I think the market doesn't seem to know what to do. It's used to higher volatility overall, but maybe some traders are still vacationing. So we have periods of dead action followed by wide sweeps. Yeah, well, Lucas, I do think that the CPI is holding people back, right? If the CPI comes out tomorrow, let's just say like best case scenario that it's under expectation, I think you're going to see this market take off like a rocket ship. Like you could see a 2% gain in the S&P 500 if we get another print like we did in December, right? But maybe this has been like the quietest start to the year I've ever seen. Maybe it's because they're waiting for the inflation data. It's like kind of funny because I don't think that this inflation data is going to be too surprising. I think that it's going to show. I think it's going to be in line. I think it's going to be in line. I saw that one too. Oh, you were talking about the videos. Anyways, the point that I was trying to make with all of that was the people that you see here on the channels your audience watches has been changing and diversifying. So this guy, I think B is, I don't recall if he's newer or if that's that other guy that I can't remember. Yeah, no, I think this is I've never seen this guy before. He's new. This one, order flows, that's 15,000 subs. That's the one that I find really interesting, is when there's somebody that's pretty close in our niche and they're already bigger than we are. It's like, whoa, how did they do that? These ones are fine. Fat Cat. So people used to say, oh, Fat Cat, and I would go to the channel and I didn't see anything. Now I go to Fat Cat and it's like, oh, they do have stuff. It's not bad. He's a little bit bigger than we are. But here's the thing with this guy is like, oh my gosh. Okay, so here's a video. When to let the trade breathe. Right? 32-minute video. So I was like, oh, I've heard good things about it. Like, some of you guys seem to really like this guy. I couldn't watch it. It's not a knock on him. I just don't have the attention span for it, man, to sit for 30 minutes through that. I even tried like watching it double speed and everything. It was just like, was a lot of, and not a lot of information, you know, which is, you know, that's just the way that he makes his content. But I didn't think that. What do you think? Oh, stay away. Stay away. He's one of those guys that you got to be careful you say anything, because they come and harass you. There's like these narcissists that will come and harass you, but I would stay away. This one, Tory trades, that's new. Futures analytic, I've seen before. It's good to see Jigsaw Trading is showing up on that list now. Anyways, it's interesting. It's a much more diverse range. Let's look at this B guy. What's getting him popular? Learn day trading in 4 minutes. Well, that would do it. Bullshit is what it is. I can just see from the right there. It's like, it's bullshit. It's just clickbait, right? Profitable in 3 months. Okay. I don't lie to you. And that's why they do so well. But I want to sort it by popular. Turning 3K into 100K. Yeah, none of the other channels that I watch were on that list. The what's popular on YouTube is not a good indication of what's actually good content that will make you a better trader, that's for sure. I really think that YouTube should work on this more. I don't think they care. I don't think they care. So Mr. Beast, he had this video the other day that, he's been like teaching other people now, like, you know, how do you do well on YouTube and stuff like that. And he said that what I do is I think what would make a good thumbnail, and then I make a video completely around that thumbnail. So this is kind of what I did for the Ninja Trader videos. I was like, okay, Ninja Trader, 24 tips. That's anybody that uses Ninja Trader, they're going to want to click on that video, right? And that was the whole premise behind that video. It was a lot of work, by the way. I was probably put more work in that video than any other video I've done. Right? So clickbaiting people on the thumbnail works, and making a video that says how to, you know, go from $3,000 to $100,000, people click on it, even if the content in it is complete bullshit. And like, he probably did, maybe that really did happen, and he probably has like real content in there, but I'm just saying it's not realistic for people. And frankly, I think that it is, I'm not going to say that it is dishonest, but I think that it is irresponsible to put that sort of stuff in your thumbnails, because that is not the typical performance of a trader. The typical performance of a trader is they're going to lose everything that they put into it. And by putting a thumbnail out there like that, you're presenting that as typical performance, and that's not what it's going to be. So I think that if the FTC was doing their job, that they would come in and do stuff about clickbait videos like that, right? But YouTube seems to think that, well, if people click on it, then it's okay, right? And I think that in the long run, that it's actually hurting you. I think that you got to do something to make it so that, you know, the content is actually good quality content, and that it's accurate content, and that people that are basically presenting this is how you're going to make $1 million sort of nonsense, right? That those don't get pushed by the algorithm. But YouTube just doesn't seem to care. Oh, you don't even have, you know who's somebody that I really like? Oh, wait, I can't even remember. Patrick Boyle. Is that what his name is? Patrick Boyle? Let me see. Yeah. Maybe I just like him because he's bald. Patrick Boyle is real shit. He has some videos on here that are like some of his least watched videos that are basically like, this is a popular hedge fund strategy. Here's how it works. That's like the most valuable content on his channel. Right? And he's kind of shifted from going from the informational content to kind of more pop culture, you know, like talking about the pump and dumps and Sam Bankman and yada yada, right? I like his channel though. He knows real stuff. I tell you what, man, when you run into people that have actually been in the industry and really understand markets, you can tell like almost right away. This is why I get so you know, so there's some people in Discord that they're like, oh, you know, I'm doing well, I'm doing X thing and I'm doing Y thing, and they're like, well, you know, you don't like it, but you know, there are different ways to trade and it works for me. So no, it doesn't. It's not working for you. You're full of shit. I know, because you're saying shit that if somebody that was actually successful would never say, right? You're faking it. You're a kid that's pretending, and I can tell almost immediately. And I'll let those people kind of hang around in the hopes that they'll change, but they don't. I get rid of them. And people are like, well, why do you give them, you know, how can you do that and with so much confidence? I'm telling you, man, it sticks out like a sore thumb immediately. If you've been in the industry, like, you can just tell. And I'm sure that somebody like Akshay, for instance, can probably tell very quickly that although I worked for a firm, I was not a trader at the firm, right? He can tell that I was probably more in technology, because I don't know nearly as much about the deep fixed income world as somebody that was like actually trading fixed income products was, right? People have this idea of, just come in and do the thing and fake it till you make it. It doesn't work in trading, guys. You have to actually perform. Better system trader pod? Yeah, that sounds like not interesting to me. Better system. I come to that conclusion every day. He was tech and back end development, not trading. It's true. It's true. 100% true. But so here's the truth of it though, right? Is that if I was a fixed income trader or something like that, I would not be able to do this. Probably would not be able to do this, right? The reason why I'm able to make the content that I do is that I learned enough from being at the firm to know what to go out and learn, and then after I left, I went and I learned it on my own instead of being taught by them, right? That's what allows me to come in and make this kind of content and teach you these kinds of things, right? Because there's lots of traders out there. There's lots of people that have worked at a big bank and then they left to trading or whatever. There's like Anton Krill, he worked for Goldman, he was a trader and he left, right? He has a course or something. But like, have you ever seen these guys explain what the square root law of meta order impact is? No, they don't talk about it, right? Why is Seth the only one that talks about it? Because I can. Because I learned it on my own. They didn't teach it to me because I didn't trade for them. I'm not a huge fan of podcasts, for starters, and to ways. I used to be a kind of person that I always wanted to have something on in the background and that sort of a thing. And now I just can't focus. I'd rather just have white noise. So even some music is too distracting to me sometimes. Yeah. One of the things that's frustrating, I mean, I don't really like talking about other people. I like, when I say that, everybody likes talking about other people. Like, that's just like a tendency that we humans have. Is like a gossip is like an evolutionarily developed behavior of some sort, right? So, but like, from a philosophical perspective, I don't really find much use in talking about other people, That's why I try and be like, okay, well, so like, here's a specific example, but I try and turn it back into more general things, which is like, okay, this is how people on YouTube will mess with you, is they'll put these clickbaity headlines up about how much money they're making, and it's all nonsense, right? But I get carried away and I say too much. So I'll come in here. There's like some instances where it's like ICT. I don't want to like attract ire or anything, but I would just stay away, and I just put it at that. If you really do research on that guy, there is so much crazy stuff that you'll really be like, oh yeah, you really do want to stay away. That one is nuts. Okay. Like, that one is like, I don't know why Cuffeezel hasn't made a video about him yet, because there's some funny stuff in there. But there's some other people on here that like are generally, like, they're people in the industry and are well respected in the industry, and I don't respect them at all, and I don't have enough. I can't come in and say like, they're dishonest or anything like that. I just don't like them. And so it's probably better for me to not say anything about these specific people. But I'm looking at this podcast and I already see some of them listed here on the podcast. So Can't listen to music while researching evolutionary sickness. It seems like it's an okay podcast. Maybe if they wanted me to get on, maybe I would do it. I've been saying to myself, like, I need to collaborate with people more. It's hard because I really find struggle with that. Like in other things, I've had no trouble collaborating with people. Like when I was doing the annual tournament thing, we would work with anybody that would talk to us, or when I was doing the music, anybody that would work with us, and we built like such great communities and things like that from that. When it comes to trading, every time I turn around, I just look at other people's trading and I'm like, well, they're sharing nonsense. So I don't want to jump on it because I'm afraid that I'll be associated with these methods that I think are bullshit. Yeah, Eulers. Well, I don't think I've ever heard. No, I've watched webinars with Eulers. But like it kind of comes back to this thing, which is like orders have very strong impact, and so they can move price very far away from fundamental value. But that also means that like if there's a statistical aberration in there that you can take advantage of, you trading it will move the market, and you can remove those inefficiencies from the market very, very easily. So you get a market that's very statistically efficient and not very informationally efficient, right? So right there, when I see better system trader, my immediate thought is, oh, okay, so they're talking a lot about technical analysis, right? When the number one thing that a retail trader can do to help improve their results is to ignore the charts and avoid trying to perform any kind of technical analysis whatsoever, and just try and predict the orders based off of the information about the market that you actually have, like what kind of news is coming up and what the sentiment is, and reading the headlines and that sort of a thing. And yeah, you can make money from algos, like there can be some systematic trading, okay? But number one, those algorithms don't look anything like what retail traders used to trade, okay? With like moving averages and stuff. I'm not saying that there's not a moving average involved in the strategy, but like, or for instance, a very large portion of high frequency trading has to do with correlations between instruments, for instance, right? And retail traders aren't competitive on those sorts of things. We're not fast enough. So I'm going around and I'm looking at content and I see technical analysis, I immediately turn off. So nobody in the industry that actually does this really truly uses like technical analysis like retail traders do. Some ways, guys. It seems to me, so like a podcast that is like a neutral podcast that they get a lot of different people on, and the person is not, like what I'm doing. I could interview people, but I certainly am trying to teach you guys certain things about the markets, and I have my own things that I focus on, right? So if somebody that I knew, like if ICT was like, hey, why don't you come on my YouTube channel? I would tell him no way, because I think that the stuff that he teaches on the channel is bullshit. But a podcast would be nice, and there is this room for like new podcast about trading in futures, because Talk with Traders quit the interviewing portion of it, at least, right? And maybe I should start my own. I would interview different people, right? If I was doing the podcast, I would be like, let's interview Jean-Philippe Bouchot. Let's interview, I would be trying to interview like top researchers, not retail trade education gurus. Right? That's the other thing, is I never did this with the intention of becoming a trading guru, right? It was supposed to be a journal just to record my trades, and then it turned into the live stream did well, and then it turned into, well, we can make videos, and some of those did well, and I just like making videos and trying to make good videos and grow the channel. I still would prefer not to be called a guru, right? Because the information that I'm teaching you guys, I don't come up with this stuff. I did not discover these things. I'm only sharing with you guys stuff that comes from empirical research that for some reason retail traders ignore because it's too complicated, or I don't know, I don't like being called a guru. But sometimes I do well and sometimes I don't. BSD interviews rocket scientists and researchers. Oh, that's good. I have seen so I tell you what, man, if you want to get like good information, like the best place on social media to get good information is 100% LinkedIn. Ooh, man. And I don't know, like, I can't give you like explicit, like, here, go follow this guy and go follow this guy. Just get on LinkedIn and try and find people at firms and follow them. And then, read it every day, look at who comments on their posts and go and follow the people that are commenting on it. And you do that for a year or whatever, and you will have a really good network on LinkedIn, and you can get like real information, You really want it, because the thing is that the people that really truly know what they're doing, like I said, the only reason that I'm able to do this is because I didn't actually trade for the bank. Because if I was traded for the bank and then I came out and I was, teaching people on YouTube how to trade, they would probably have a problem with that, right? So the people that could really truly teach you things, they work for firms, and they're probably going to work for firms for the rest of their lives. And they're not allowed to have YouTube channels or post on Twitter or anything like that, but they are allowed to post on LinkedIn. That's why LinkedIn is the best place, best social media site to find trading information. It really is. Probably spent way too much time on that topic, but I feel like the session has gone by pretty quickly. We're still stuck, man. I think that one of my charts has stopped updating. What the heck is with this? We're still stuck in the range, but my CN chart did not update. Am I not? Oh, yeah, it's disconnected. Probably disconnected while I was doing that debugging. But I can tell from the DOMs that the market really just did not move. What are your thoughts on this FTC proposal that would block companies from having non-compete clauses in their job contracts? Oh man, that is an interesting subject, actually. So you know what? When I worked for the bank, there was a non-compete clause that I had to sign to leave, or to get like my severance or whatever. But I thought it was reasonable. It wasn't like you can't work in the industry ever again. I think it was like 6 months or so. Like, I thought it was a reasonable non-compete clause, right? I think the whole thing is that the people that have been like using non-compete clauses and like abusing them didn't actually need them. because the industries where like it actually, like if you're a trader and then you go and you start trading for somebody else, and you could be using information that you might have had at that firm that would still be pertinent for 6 months, you know, to your advantage. So there's like a real reason to have a non-compete clause there, right? But like, you're a software engineer and they don't want you to work for any other tech company ever again. Like, that's stupid. So I guess I don't know if the non-compete clause will actually have much of an impact on anything, but it's probably a good idea. Laugh, LMAO, LinkedIn. The HR department asked me to make one. I would use it to scratch trade PCs. So the risk management department made me delete it all within 2 months. Yeah, no, you can't post that. But what you can do is you can say, oh, look, here's a research paper that came out this week that I really like, that's public. And then you share that. Like, that's the stuff that you get on LinkedIn that can be really valuable. What do I got to do to get edge clear to connect here? I'm gonna try restarting Ninja Trader. Now, in all honesty, I mean, the amount of stuff that you're gonna get on LinkedIn is still gonna be limited, but it's the best that I've found on the internet, at least, outside of like archive. And talk to these guys. I have some traders on LinkedIn, and I think when I'm done writing this strategy PDF, I'm gonna see if I can get them to read it and give me feedback, because I really want this PDF to be like, if you want to start day trading, this is where you should start, and this is gonna give you the correct approach of things. It's not going to give you the straight strategy, but it's going to give you the information that you need to develop your own strategy and your own market. And so there are some institutional traders that I have that I think could maybe give us valuable feedback. We'll see. Just make stuff up as you go. Put Seth Ellis government sacks on your card. People will just believe. Enough people believe it. I tell you what, man. It seems to me that the way that social media works is the most narcissistic people win. That's what I really think it is. Is like, if Seth was more of a narcissist, then he would already have 1 million viewers on YouTube. You know what I mean? And if you just come in and say, oh, I'm making money all the time, and you're gonna be a millionaire too with this quick strategy, right? Nobody wants to come in here. Well, 90% of day traders lose. There's, you know, even with the information that I give you, the majority of people are still going to lose, because that's just the nature of the game. And it's going to be really hard, and the amount of money that you're going to make is probably not worth it, and you should only do it if you really truly love this thing. But, you know, you can still enjoy it vicariously. You can enjoy it vicariously through me, and you can learn things about the markets that might be useful in other ways from watching me. People don't want to hear that. They just want to hear, I'm going to make you $1 million this week. I turned $3,000 into $100,000. That sort of, you know, that's what they want. And the narcissistic person will bend things to appear that way. And I don't, because I know that in the end, that's not what helps you. It's harmful to you is what it is. It causes people to lose money. It's irresponsible. Did you see the tweet from OpenAI co-founder Greg Brockman about possibly starting a paid trial for a professional version of ChatGPT? No, I didn't see that. There is the sandbox. I don't know what else would be more flexible. Mamba FX, how I turned 10,000 into 100,000. I don't think that thumbnails like that should be allowed. If you come in and you make a marketing strategy and you do advertisements and stuff and you advertise in that manner and you're selling a product and your average customer is not turning $10,000 into $100,000, then the FTC will hit you. Right? So that's my standard. And everybody seems to think that it's okay to fake it and do the clickbait on YouTube. But with finance, I don't think it is. I think it's immoral. I think that you're going to misinform people and cause them to take on excessive risk that is outside of their own risk tolerances, and they're going to lose money from it. I think that people are going to lose money, and it's going to be because of your clickbait thumbnails. And if any of the people, because we talked about a couple of people, if anybody comes in today and they're like, oh, I heard Seth was talking about us, so we'll come in. That's the advice that I would give to you, is do not make performance claims that are not indicative of the average customer or trader or whatever the deal is. That is the standard that the FTC has, and I think that should be the standard that we use in our YouTube thumbnails. So now I've said my piece, we can leave for the day. Actually, let's just come back here and look at the charts, because things did, Warrior Trading got slapped with it. But the thing is that everybody will look at Warrior Trading and they'll say, well, he was offering this product in this trading course and all of these sorts of things, right? I would like to see somebody, what I would like to see happen is they put up a video where they said that they turned 3,000 into 100,000, and then they investigate it and find out that that's not what happened, or they say that is not the typical performance and you didn't note that in your video, right? And they get hit for that. I want to see a creator get hit by the FTC just for the thumbnail. You know what I mean? So that we can stop this nonsense, because it's really hurting the industry. I really think it does. Okay, so here we got the treasuries here. So here's the last hour or so of activity. Like I said, we had like this big up and down. And there was a peak at 13, but like, look at this. This is just going nowhere. This is like the most dead I've seen the treasuries. I wouldn't say it's this actually happens a lot. It used to happen a lot more. This is a quiet market. I tell you what, guys, do not miss tomorrow, because CPI is going to be nuts, okay? JP Morgan's research note that they put out yesterday said that even if they come in line with the consensus expectations, that the S&P 500 is probably going to rally 1.5%. So it's going to be a monster move tomorrow, and especially if it's like under expectations again, which I think is more likely than that it's too hot. The market is just going to rocket out of here. And if it is too hot, minority case, but still possible, this market is going to dump. It's going to be like one of the largest one-day down moves ever. So don't miss tomorrow. It's going to be fun. What should we put in the video? I don't want to put that what we actually talked about. Passing slow market with Chit. That's what I'm going to put. Even though I think that sounds really cheesy. Passing slow market with Chit Chat, because that's really what was. I enjoyed talking to you guys today. Martingales are good drinks. No, I can't put that. I'm always. Maybe I'm too cautious, but I'm always sitting there thinking, what could somebody possibly do? Or think, be led to do or think based on something that I said. That's a lot of responsibility, man. I think one of the things that really bothers me, it doesn't bother me that I see other people that have been more successful on YouTube. It doesn't even necessarily bother me that there are YouTube channels within our niche that have done better than our channel, even though I feel that our content is better. That doesn't bother me. What bothers me is the people that have that influence and abuse it, or at least don't take it seriously enough, right? Someone did break the bank at Monte Carlo using a martingale in the 1800s before they had table ceiling limits. So I didn't know. I have to look that up. I would like to make videos about like historical things that happened in markets. I think that could be something that we do in the future that could be fun. Tell stories, but it's time for me to go, guys. Do not miss CPI. It's going to be crazy. In the meantime, stay excellent, team.